So welcome to this webinar on themes for next decade. Now, just to get started, now I will, Sumit, just out of curiosity, asking you being a CA with almost 20 years plus experience, just let's flashback down the memory lane. What made you get into capital market? Because being a CA, probably audit, taxation, I feel many CAs are into that side of the CA. What made you get into capital markets?
Yeah, Krishnan, thanks a lot. First of all, let me also welcome everybody on this call and taking time to really understand what themes or what our thoughts are as such. So, coming to your question, Krishnan, yes, stock markets always kind of enthused me as such. Even during my CA exams, I am CA as far as chartered accountant, as far as my professional is concerned. But even when I was going to examinations, my mother used to say that was, "Bacha pad le, nahi to aage kya karega karke." But even during those times, I used to basically trade or maybe invest in the stock market. So it goes back to those times. So at that point in time, in November 2000, I passed out. Last 15 years, or rather more than 15 to 20 years, I have been in markets as such. I worked as an equity fund manager. I started as an analyst with Birla Sun Life Insurance as far as markets are concerned. I have even worked on sell side as such. So coming or maybe giving some more insight into the story. So my first job was with Tata Consultancy Services. Actually, that was in technology company. I was in US for almost 1.5 to 2 years. There I realized I need to really participate in equity markets, and that's why I did CFA. And during that point of time, I joined the investor relations department of TCS. And since then, I have, or my journey towards equity markets have been there. So by reading investing books as well as affinity towards my markets and India especially, kind of brought me to this particular field. So as I mentioned, I worked as a equity fund manager. I mean, grown from an analyst to senior analyst to co-fund manager, fund manager, and then I was lastly working as a head of equities with Star Union Daiichi. I have managed funds of varied sizes, of large cap, multi cap, as well as high watermark products. Krishnan used to work along with me. I'm sure, Krishnan, you remember the Platinum Plus. That was one where Birla Sun Life actually pioneered, and many of the competitors or participants in the insurance market also kind of launched that particular product. But over a period, given the risk involved, the regulator actually has asked for phasing out of such a product. So it was an interesting journey as far as
Great. Thanks.
So our belief has largely been around, yes, there is a kind of infiniteness, which is what is represented by the circle. There are so many stocks available. There are so many instruments available to really make wealth. But at the same time, there is this finiteness that is required, and which is what the triangle represents. And this is what Tikona represents, which is finite over the infinite part. We are driven by research. We are built with networks, and we act with conviction. Because what we believe is research is where you will be able to identify the stocks or asset class. Within that, we have to build the networks, and which is where you can actually find new things and act with conviction. And these three things feed into each other. And this is how our logo for Tikona Capital actually was born.
Wow, that's really interesting and good insights again, must say. Given a lot of thought before making the logo.
Right. And this is what it should drive us in the future as such, right?
Great. Wish you all the best in that. Maybe just take next the philosophy which you carry.
So while beliefs are in place, ultimately what we have to freeze on is what is our investment philosophy. So, I mean, I was always curious in my journey that, well, how the wealth is being made over so many years. So our thought process always came into, or rather, during my 15-20 years of association with markets, we have always thought about, बॉस ये पैसा कैसे बनेगा करके हरदम ऐसा होता है कि बॉस कुछ ट्रेड के लिए आइडियाज कर लो और यू फाइंड दैट ओके ये थोड़े टाइम के लिए अच्छा दिख रहा है and then and when we look back we find that there were many stocks or companies which we had seen in the past have become a multi-bagger 10 times 20 times 30 times. So it always came to my mind that okay, I mean, despite these situations, how is it that people are able to make money, or how the real investors are able to make the money? So what I could gather, which is a very simple concept, that it is the time in the market which matters than timing the market. So while reading this, it really seems very simple, but then we have to deconstruct this and ensure that how, I mean, while one may read this and believe it, one has to really go deeper into it and form a philosophy out of it, because ultimately for spending time in the market, we need to have our philosophy driving it. And which is why we thought about this, which said that most of the times it is the quality or low quality stocks which entice you to buy, but at the same time, those are not something that can create wealth for you. So we always look at high quality businesses which are at reasonable valuations and that are offering sustainable compounded risk adjusted returns. So time in the market के लिए most of the times ऐसा हो जाता है कि boss, you are not able to keep that particular stock. So for that we need to ensure that the stocks, the managements are high quality managements and they are offering a sustainable compounded risk adjusted return possibilities for us. So this is why our philosophy tied to the curiosity that we had. So that's how our investment philosophy is. And this is why we always look for sustainable themes, which are very large themes. And that is how we have come to the themes of decade as such. And before the themes of decade, one must also be aware, or one must also be clear how our country is looking for, or how the current markets are looking as of now. So based on that, I mean, I think let me present the market outlook first. And once we are clear on how the market is looking, we will definitely talk about the large themes for the decade, for the upcoming decade that we have. So again, as far as market outlook, let us first discuss why the market corrected. Wall of worry. What was the wall of worry that led to this kind of correction? How is India placed, and what are the earnings and valuations as of now? So market corrected by 18% if we look at from October 21 to the June 22 as such. Major reasons, if we look at the correction of market, it was largely expectations of liquidity tightening, soaring inflation, interest rate hikes, rising commodity prices, food inflation, and supply chain issues and geopolitical issues. So if we look at each of them, actually they are interconnected to each other. It all started with tightening and then geopolitical issues added to it, which were coupled with supply chain issues. Like, for example, because of Ukraine-Russia war, as well as in China, because of COVID, there were huge supply chain issues which led to higher freight costs. And because of higher freight cost, there was a spiraling as far as commodity prices are concerned, as well as food prices are concerned. And it created a hiccup as far as supplying as well as on the demand side. So all these things were interconnected. And that is why we saw that market, as far as Indian markets are concerned, they corrected by 18%. And it was also the FII outflow during this period which impacted the markets. So global markets, or if you look at the complete market scenario, from highs that we had seen in October, almost markets corrected in the range of 12 to 35%, with Nasdaq correcting the most, and India actually did better at downfall of 18%. And largely the impacts were out of the situations that we talked about. So while there is correction, but there is always a wall of worry. Look at last 40 years. We have seen mounting fiscal deficits impacting our market, or balance of payment crisis that happened during 1991. Harshad Mehta scam, where market corrected by 40%. And similarly, a dot-com bubble, which again led to almost 40 to 50% kind of a downfall. Or in 2008, we saw a sell-off of at least 30%. And the recent ones, as far as GFC is concerned or COVID is concerned. In case of COVID, we corrected by almost 38%. So if we look at a history of 40 to 50 years, there is always some correction ranging from 20 to 30 to 40%. There is always a worry. We have seen that this worry generally remains between 18 to 25 months as such. So almost 1.5 साल से 2 साल होता है. So अपने living या professional life में 40 बरस की अगर professional life गिनते हैं, so उसमें at least 8 to 10 times we will be able to see this. And if we take an average, they would last about 10 to 15 years. So most of the times what happens is we keep on worrying about this event, which is just 20 or 30% of our life, whereas 70% of the time, actually we are in green. Even if you look at this chart, 70% of the time we are in green. So there will always be wall of worry. What we need to ensure is we are having right allocation of assets in our overall wealth, and within equity, again, a right kind of allocation depending on where we are in our age or our age profile or dependence that we have. And with that, this is how we can actually ensure that we are able to participate in this kind of upfront. Look at this. I mean, during 87 or so, I mean, we were just 1,000. We are almost 600 times of what we had seen during 86 or so. 1,000 say almost we are 60,000. So in 40 years, that kind of return at the index level has been made. If we take stocks, the wealth creation could be much larger. So it's always there is something to worry. ये तो फिर भी बहुत कम number of worries I have used. There again, there would be China, US-China trade war that we talked about, double trade deficit that we talked about, COVID that keeps on kind of coming up. Europe में issue हो रहा है, Europe का inflation हो रहा है. That, I mean, these small worries keep on coming up, and there is always wall of worry. We have to ensure that we are able to participate, we are able to compound. Whatever comes as a hurdle to our compounding is what we have to exclude. Now coming to how India is placed, India is actually seeing a 8-year, I mean, inflation is something which is being talked about for markets to getting impacted. India is seeing an 8-year high, whereas if you look at US is at 40-year high. So for us, for our generation or our consumers, basically this is something that can be tackled. Unlike in case of US, the inflation that has to be tackled is like once in a generation. The current generation would have not seen this kind of hyperinflation. But in our case, it should be a manageable one. Also, the spread between income growth and expense growth is much lesser as compared to what much higher in India versus what it is there in developed world. So the consumers in India is at much better placed. So like I mentioned, even here, India is much better placed. I mean, the correction was far lesser than what we saw in the developed world. Same is the scenario as far as our inflation situation is concerned for the consumers. So looking at how our markets perform from the bottom of COVID, we are almost 1.2x. Even now, the recent bottom, we have been on the upper side of uptick. That shows the strength of the markets as well as the current economic situation of India. During first week of July, this is what we had posted on our social media, that markets are looking to bottom out, and 12 months down the line or in the near term, most of the issues that we are talking about, rather it be geopolitical issues, inflation, moderation in global commodity, as well as recessionary expectations, would actually be consumed or maybe known by the market, and which is why we were of the belief that we were near the bottom at that point in time. Now let's look at what are the situations that have created India in a far better situation compared to others. India in the last 5 to 6 years have been going through very large scale changes, rather it be demonetization where everything turned to digitization, rather it be GST, which is again a large change, and the recent one, COVID. We handled COVID in a far better manner. When we talk to our relatives or people that we know abroad, in fact, the digital certificate that has been given to us as a COVID vaccination, that itself has created a lot of differentiation. So we have been able to handle COVID in much far better manner. Similarly, even the fiscal situation that we have is far better as compared to what is there in the developed world. US, given the quantitative easing, their debt to GDP has soared up to almost 137% of GDP. Japan again spent, even EU spent a lot as far as quantitative easing is concerned or kind of spending money is concerned. But we are far better when we went through a targeted approach as far as giving credit to SMEs, giving or ensuring that health is in place, or ensuring that vaccination at large scale is taking place. Unlike in many in the developed world, we just threw money around this particular problem. And now they are indebted. Similarly, the commodity situation or the war situation actually has made us anti-fragile. If we look at ideally, oil-dependent country should have had a lot of pressure as well as a point to which we could break. But unlike what has happened in this situation, we could actually tie up with Russia and get oil at a much cheaper rate. On top of it, it's not just getting oil, it's also that Russia would start buying rupees, and the settlement could take place in a rupee. So this anti-fragile concept has played well as far as India is concerned. Similarly, it's not just the things that I talked about. Now we are much more confident, and we can stand up and say to developed world that you have to come out of your mindset, and I would do, or as an Indian, I would do what is best for my country is concerned. And this is what actually shows that we are on the global platform where we can compete with the best. Looking at currency, that has fared better than many other currency. Similarly, we are going to be one of the highest major country of growth as projected by World Bank. And we can also see the numbers here where India is likely to grow by 7.5%, unlike many developed countries at much lower rate. And this would continue for a period of next 2 to 3 years, or even for the decade as such. Another sign of strength of country is credit growth is picking up. Last credit growth rates were mid-teens as such, which has picked up, which is showing the kind of strength despite global recession being talked about, despite the kind of challenges that are there currently. So this is an interesting piece which I wrote in May 2022. What is likely to happen with the situations that we talked about, or how the India is placed, we talked about. Here, what I've discussed was that in one of the books, Animal Spirits, where it was being talked about how the psychology drives the economy and what matters for the global capitalism. They came out with a very distinct aspects that are required in economy. So one is confidence. They talked about confidence, fairness, money illusion, corruption and antisocial behavior, and stories. So what I could gather at that point in time is, of the five behaviors, we are seeing that many behaviors, many large behaviors that are likely to impact are in place as far as India is concerned. We spoke about the confidence that we are having, that we are going to talk. We talk on the global stage, rather it be politicians, even businessmen are able to talk on global platforms in a much more confident manner. Fairness and regulation is there in place with GST, Aadhaar, as well as an enabled infrastructure, rather it be in terms of roads, telecom, as well as regulations that are there in place. All these things are putting us in a fairness zone. And similarly, we are hearing of so many successful stories where the startups which started during last 5-10 years are getting listed at billions of dollars. And that's the kind of success as well as money that is flowing in economy. And we are on path as far as $5 trillion economy is concerned in 2029. Or when we talk about this 25 years of Amrit Kal that has been talked about, as we saw during the Independence Day speech of 70, when we did this Azadi Ka Amrit Mahotsav. Coming to earnings and valuation, of course, there was fear, or rather raw material inflation is what impacted the earnings, and which is what we have seen, that around 3 to 5% or 4% downgrade has happened as far as Nifty earnings is concerned. Similarly, but at the same time, we are seeing 13 to 16% kind of earnings growth for next 2 years, which is what provides the strength on an overall basis. Within this, of course, there are pockets of growth which are growing at a much faster rate. Coming to valuations, valuations definitely are not in a expensive zone. They are near medians of around 21 times. And if you look at, these are TTM earnings, TTM valuation earnings, and nowhere near expensive zone. And rather, what has happened is, with every cycle that comes in, it starts with pessimism and gets converted into optimism. So I think net, as far as India is concerned, we are placed very well, rather it be economy is concerned, enablers of economy is concerned, confidence to convert that particular enablers in place, and there is no over optimism about such a situation, which is what we can see in the valuations that are there. And even the Nifty earnings have got corrected by this. So that summarizes as far as what the market outlook is. Now, I'm sure obvious question Krishnan or everybody would have is, boss, teji hai, ye to achhi baat hai. How do we play it as such, right? So how to play? So what we have done is, we have for the decade, we have come out with 6 themes, which is what will drive the earnings, as well as which is what will drive or make wealth for us. The whole idea to identify these themes is to ensure that we play around with these large themes, and any correction or any new company coming into such radar should be available, and we participate in this. So the whole idea was to identify these themes, stick with these themes, and sticking with these themes create wealth for yourself as well as for your prospective clients. So first is Technification. Second is consumerism, financialization, formalization, clean energy, and globalization. Let me also take you through specific themes that we are talking about. So first is financialization, looking at what is happening around. I mean, given the fact that we are going to grow at a healthy rate of 6 to 8% as far as GDP is concerned, and on top of it, around 4 to 5% of inflation, we will see a very healthy nominal GDP growth rate. And within that, what is happening is, I mean, generally there is a credit multiplier of 1 to 1.5 times. And that is why we could grow, or rather credit could grow at a much faster rate of 12 to 18%. Within that, what is happening is credit growth is picking up, like we mentioned, about 14% growth that had happened. And within the credit, retail credit is growing much faster. Private banks are large beneficiary of that. Private bank market share against the public sector is also going up. And there is a huge under penetration as far as retail credit or MSME credit is concerned, and mortgage or credit card offers. Basically, credit card is quite under penetrated. So this offers a very huge opportunity as far as banking is concerned. On top of it, financial services and insurance are new growth avenues for banks as well as for the companies themselves. So let me further get into specifics. So as I spoke about credit growth that is picking up, and retail credit growth within that is growing at much faster rate. Private banks market share, if you look at gross advances, that used to be about 36%, has grown to 42%, and it can further grow given the fact that they are able to provide services in a much better manner. UPI has grown almost 30x, and what we see is they have created a new avenue for using payments, and which is why it becomes quite integrated as far as the banking services is concerned. So retail is a $2 trillion opportunity. Within that, as of now, we are at $1 trillion, and which is growing at healthy rate of 18%. Similarly, MSME is another big opportunity. Formal credit has to reach at many places. So banks definitely have a very large opportunity to participate in. Coming to mutual fund AUM, that has grown by 5.5x in the last 10 years. Insurance is another under-penetrated opportunity that which helps the insurance companies as well as even the banks as far as their distribution is concerned, or ensuring or servicing their clients in a complete manner. Equity as a percentage of household still remains to be under-penetrated. In the urban areas, mostly we see people who are invested in equities, but at the same time, on an aggregate level, we are still under-penetrated at just 4.8%. It has been in the range of 3.5 to 4.8%. Property and deposits continue to remain as a larger proportion of the wealth. This has to go up with the increased participation. Another area that is propelling growth as far as financialization is concerned is fintechs are taking center stage. Two things are happening. One, fintechs themselves are benefiting. And another thing that is really propelling this is putting the banks to invest in technology and thereby servicing their clients as well as making sure that the pie is expanding. So this is a big theme that we want to play for the upcoming decade. Of course, once we identify the theme, we go deeper. We go deeper in each of the companies, as well as look at the companies that can convert the opportunity into best and capital efficient manner where they can deliver high growth as well as high ROEs. Another large theme that we are seeing emerging is Technification, where the adoption of tech primarily got accelerated because of COVID. So the spends are going up, adoption of tech is going up. There is still a large opportunity as far as IT sector is concerned, smartphones are adding another angle to the current techification trend that is taking place. So if you look at any of the industries, every industry is actually seeing techification as a trend, rather it be auto, where connected vehicles, autonomous cars are being talked about. BFSI, we talked about how fintechs are disrupting the sector. Consumer, food tech, or D2C is what is driving things. Currency, Bitcoin or digital currency, that is being talked about. So every aspect of a sector is getting disrupted as far as technology is concerned, and which is why technology is here to stay, or rather the importance of technology is increasing day by day with every sector, vertical and horizontal. Cost of data, we all are kind of beneficiaries of this. Penetration as far as smartphone is concerned is going up, which is what is making us interconnected and consume technology at its best. Uh, E-commerce growth, so internet users are almost at 70 crores as far as India is concerned, which is what is driving our time spent in internet. Similarly, other areas where smart homes or digital right again are uh, creating the enhanced intimacy with technology. If you look at the uh, projections being done by players, I mean, consulting firms like IT consulting firms like Gartner, McKinsey, or OAM, what they are talking about is it's a 4.5 trillion kind of a worldwide IT spend, which is likely to grow. If you look at the digital economy, that is expected to be $4.8 trillion with the digital revolution coming in. And we are already seeing that most of the time is going towards consuming technology. And the another area which is further coming up is IoT, where 50 billion devices would be connected. Uh, on top of whatever technology evolution that we talked about, IoT is going to be almost 4 trillion to 11 trillion by economic value in upcoming couple of years. Similarly, metaverse is adding another complexity on top of it. So IT sector, despite whatever is happening in the developed world for now, we think that there is further large opportunity. We are just 7% under, we are just 7% penetrated as far as total IT spends are concerned, and just 11% as far as outsourced IT is concerned. So we continue to be positive on that sector. And on top of it, it's not just the IT sector that we are positive on. Because of techification, there are many platform companies in India that are looking attractive, rather it be, these are not recommendations, but I'm just giving an example, rather it be Nykaa, India Mart, Root Mobile, or such kind of companies. Coming to the next theme, consumerism. Consumption is likely to be almost 2.5x. We are going to be third largest consumer economy. The driver of large consumption is of course the GDP per capita that is growing. The size of households is decreasing, and consumption is expanding across channels. The digitalization or the social media itself is also increasing affinity towards consuming more and more. So that is what is driving consumerism. If you look at globally, generally it has been seen whenever a country surpasses a $2,000 per capita kind of a number, the consumption really propels, because most of the incremental money that is being earned is going towards the discretionary spends. Also, if you look at GDP per capita compared to many other countries, we are still far smaller. Look at US, that's almost at $63,000 per capita. We are just at $2,000. Even look at China, they are almost 5x. So even if we land at 4 to 5,000 a kind of a per capita income, which is what is expected in next 6 to 8 years, definitely consumption is likely to have a big boost. Uh, On top of consumption, we may see urbanization is another thing that is going to add for consumerism. Uh, Almost 36% of the population would be currently urbanized, and that is expected to be almost 56% by 2050. I when I was there is an interesting anecdote currently when I was meeting one of the QSR companies. What they've started mentioning is the demand that they are seeing in tier 2 cities is far better than what metro or tier 1 cities are seeing, and the economics is actually playing in their favor. So most of the QSRs generally get impacted because of the high cost of running or high cost of making profitability, because unless the rental costs are quite higher as far as metro is concerned. So ultimately that has to get converted. Similarly, looking at two-wheeler or four-wheeler penetration, we are far lower as compared to the large countries, rather it be China or US. And on top of this under penetration, we are going through a big change of electric vehicles driven by clean energy, as well as the electrification theme that we are further going to talk about. So India consumption story remains quite strong, rather it be F&B, housing, transport, or healthcare. The opportunity size is quite large, and we remain under penetrated. So that's a big theme that we want to play. Another theme that we are talking about is formalization. We have seen GST growing at a rapid pace. And within GST, what is also happening is tax to GDP ratio itself is going up, which implies that most of the businesses are getting converted into organized, or the unorganized themselves are losing out as far as competition is concerned. So there are many sectors where the unorganized portion of that particular sector is quite high, and that conversion is what is the growth opportunity that is available to most of us. So if you look at retail continues to be almost 90% unorganized, and within retail, if you look at players on the pharmacy or grocery, that is still very unorganized. Even opportunity like footwear and apparel continues to be on the unorganized side, with 60 to 70% being unorganized. So there's a huge opportunity as far as conversion on this side is concerned. Similarly, tax to GDP ratio, as I mentioned, is going up, and GST, which is what is driving this. So the sectors that we talk about that can be beneficiary of this theme, whether it be ceramic or tiles, plywoods, or the consumption items, or the cable and wires industry. So this is offering a huge opportunity as far as formalization theme is concerned. Next is, of course, globalization. We have seen exports showing a significant growth of 44%. And with China Plus One and manufacturing PLI scheme, we are likely to see the manufacturing participation as far as globe is concerned to rise. And it's not just manufacturing, it's also services that is likely to drive the overall situation. So if you look at our manufacturing share, yes, please.
If I can interrupt, yeah, Krishnan, sorry to disturb. Now, just to correct my understanding, recently I got a WhatsApp message saying that the IT exports are greater than the oil imports. So how true is that? Is that really true?
So Krishnan, definitely with the current situation, we are likely to kind of overtake that situation. And yes, with the fall in crude prices, that is happening. And see,
Great.
Crude is of course a commodity, and lower the import, better it is. And versus exports of IT, which is what is a value addition in the country is concerned, because that is what will prepare further a multiplier effect that is there. So even if we are cut as far as imports and exports is concerned, the value of that 120 or 140 billion dollar of export is having a much bigger multiplier impact. Sure. So coming back to this theme of manufacturing, GVA is kind of rising as far as global part is concerned. Similarly, if you look at ease of doing business, ranking have been going up, and the base corporate tax rate, which has come down, is going to propel new manufacturing business into India. Uh, an interesting point here is that we are almost 18% of the global population. Let me repeat, 18%. But if we look at our manufacturing GVA, we are just 3.2%. So this gap somewhere has to be filled in. Even if we reach 6%, that itself is doubling of our manufacturing sector per se. Even GDP is just at 3% of the global percentage. So all these things point out towards the fact that there is a huge room for growth. We are quite small as far as the world is concerned. Huge room to grow with what is happening with China, where continuous lockdowns are there, and the wage cost is continuously going up. Uh, it offers a very fantastic opportunity as far as India is concerned. So just to take an example of specialty chemical, we are just at 3% versus China at 26% and North America at 20%, 21% as a overall. So even if we grow at 15% CAGR, we would just be 6% of the total market size. And as I spoke about that, labor cost is what is hindering growth in China. Here, the labor costs are much lower. So this is just an example how large one of the sectors could be. So it's not just specialty chemicals. There are many other sectors that we can talk about. Auto ancillaries are another sectors with upcoming digitization and clean energy. Even that offers a huge opportunity. Similarly, even food products or so can be another big opportunity as far as globalization is concerned. Coming to our last theme, which is clean energy. Of course, going forward, we as a global human citizen, we all have to participate in ensuring that the environment is much cleaner, and that is why we are moving towards it. Rather it be renewables or converting our ICE engines or combustion-oriented engines into electric vehicle. So electric vehicle is definitely the theme, or rather the disruption that is likely to happen for the next upcoming decade and going forward. So the total cost of ownership with subsidy has come down. We can look at how what is happening here is without subsidy we are still, I mean, the electric vehicle is still costlier than combustion engine, but with subsidy by 2023, 23-24, it should be cheaper. Two-wheelers has already with subsidy is cheaper, and that is why we are seeing a 10x jump as far as two-wheelers are concerned. And it continues to be a very large opportunity in the upcoming period. So when we speak to people or when we speak to experts as far as electric vehicle is concerned, what they are mentioning is it is two-wheeler that is likely to get converted first, and gradually it will move to four-wheelers. Clean energy by 2050, it has already been kind of announced that it will be 50% of generation would be from renewables, and we are seeing huge growth as far as solar or new energy, which is hydrogen, that is being talked about. So huge investments have been already announced on the hydrogen side, and we are going to see that the whole setup of whole ecosystem is what is going to drive the investments in this sector, as well as what we are going to see is we may become kind of pioneer in this, and it can become an export hub as well. So to summarize, these are the 6 themes that we talked about. Coming back to our main presentation, yes, this is how you can play the theme. And I'm sure Krishnan would have questions that, yes, these themes are something that are going to drive for the upcoming decade. How do you construct your portfolio, right, Krishnan? So, as far as our portfolio construction is concerned, what we look at is sector opportunity, growth drivers, profitability enablers, how the capital efficiency is there, whether they are able to generate right kind of ROE or ROC or not, and what is it that we avoid, which is cyclicals, commodities, high regulatory businesses, as well as highly competitive businesses. While these six themes are what is going to provide us a very good, a big opportunity, but within that we try to avoid as well as look for these traits that are quite important to us. Similarly, on the management side, we look at managements that can generate healthy return on equity with low leverage and put in a capital efficient structure in place where they are creating differentiations with product, technology, and talent in place. So, like for example, while consumerism may be a very large theme, and QSR within that consumerism is a very large theme, but there are a different kind of managements which is where the differentiation comes into picture. While one management may continuously try to create how to do business with use of technology, with use of their talent pool, whereas another management may not really be totally focused on India business despite such a large opportunity and diversifying in areas that may not be helpful to that business. So we try to avoid such kind of managements. Same way, it's not just business or managements, it is the valuation that matters. We look at ensuring that the business is able to generate uh, returns which are higher than cost of capital, and we put in place DCF methodology as well as other valuation parameters to look at how things are looking. So while it has always been said that stock prices are a slave of earnings, same is the case as far as valuations are concerned. Valuations are slave of how or what the quality of management is, what is the longevity of business, what is the sustainability of such kind of growth of business. As far as return optimization is concerned, what we do is we ensure that we are avoiding the right things. As I mentioned, low corporate governance stocks, managements where they don't have skin in the game, which is like low promoter holding or high pledge as far as their stocks, their company is concerned. Business is going through high disruption. Similarly, public sector enterprises. So high disruption, the best example is telecom sector, where there were so many players into it, which actually made such a, I mean, so many players had to exit because of the disruption that was happening in that particular sector. Similarly, on the overall portfolio, as such, we try to avoid concentration risk. As maximum single company exposure is not more than 15%. Liquidity is also monitored, and valuation risk. I mean, we adhere to valuation, but at the same time look forward to the fact that whether further steam is available. Exit management fundamentals, when they start deteriorating, we exit. If we have a better potential idea, we enter into that and try to evaluate what can be exited. If the investment thesis is not panning out as expected, we of course look to exit such kind of investment. And if there is any change in external factors, and similarly, if the risk reward changes. So that's how our overall philosophy, what the market outlook is, what kind of themes that we are playing, even within themes, what are portfolio construction approaches, or what is the portfolio exclusion is as such, right? So that's
Thanks for awesome insights. Okay, I'm sure we all liked it. Okay, sorry, I got locked out due to glitch. I was to ask you a question on risk management, because opportunities definitely look great across, which you spoke about. But at the end of the day, risk management is the game. So thanks for now. Just to continuing with the flow. So this looks good, but how do you execute all this? What's it? So how do we capitalize on these opportunities?
So I mean, given the opportunity that is there, market is looking good. What we have done is we have our portfolios, which is themes for decade. This is a large cap portfolio, which one can subscribe on small case. This is a 15 to 20 large cap index stocks, robust business, which is generating healthy returns. As I mentioned, that's what our philosophy as well as portfolio building approach is. And it offers a compounding effort. So if we look at this, the sector exposure, BFSI, of course, is the largest. Consumption, autos where we spoke about clean energy beneficiary. Chemicals is a globalization beneficiary uh, as such. So that's as far as large cap is concerned. Then we have a multi-cap portfolio, which is another 15 to 25 large, mid, and small cap companies. Here we catch the companies young, which is where it could be a mid cap or a small cap, and it again offers an opportunity to generate wealth and grow at a higher rate than the index. Here, the composition is largely consumption, BFSI, auto, IT as such. While the two portfolios that we spoke about are the larger 20 to 25 stocks that one can participate with. But let's say if a viewer or a subscriber is wanting or positive in one of the themes, we also have chota packets where people can, a prospective investor can invest. So we have formed a small 10 stocks portfolio as far as that particular theme is concerned. And one can subscribe to these themes, rather it be clean energy, consumerism, financialization, formalization, globalization, or technification. And for the viewers, we have a special discount of 30%. The coupon code is theme 30, whereby they can subscribe to this. I'm sure people would have what has been the past performance of this kind of strategy. So this is where the 1 year and 1 month back tested performance. The large cap has given actually a better returns at 17.2% versus index in the range of 7 to 9%. Mid cap about 16%, broadly in similar range. Consumerism has been the best beneficiary in the last 1 year. And similarly, these are the returns that can be talked about from 17% to 9%, and which are broadly above where the Nifty 50 is or Nifty 500 is concerned. Mind you, these are backtested performance as well as past performance is not guarantee of future. We take utmost effort to identify stocks which are better within their sectors, better within their themes. And broad philosophy is to find stocks which can double over a period of 3 to 5 years. So 15 to 25% is the kind of range that we look for as far as the performance is concerned. More so, our focus is on quality, and quality. We may kind of sacrifice some percentage of return, but the whole idea is to ensure that the power of compounding continues and it doesn't get impacted because of short-term hiccups. So just for subscribers who would want to subscribe, they can always go to tikonacapital.smallcase.com, and it's a very simple process. Submit contact details, log in with your online broker, you choose your plan, apply the discount code, pay for it, put money in your broker's account, and boom, execute it. So all that 10 stocks, 15 to 25 stocks can easily be kind of executed per se. So that's about
if I can interrupt, just if you can take us through what is small case also, because the concept has emerged of late, and also the taxation, if you can throw some light.
Sure. Krishnan, I'm sure many of them would have this particular question. Small case is actually a platform which offers a curated portfolios. Here you can see what happens is whenever a person wants to invest in equities, they always have questions. which stocks to buy, how much to buy, when to buy, and things like that. So small case is a platform where one can buy out curated portfolios from SEBI registered professionals who have done investing in their life, who are professionally attuned to give advice. So with that, also the journey of investing itself becomes much simpler. One can invest 10 stocks at one point in time. The advisor or the SEBI registered professional can always give you insights into when a particular stock from a portfolio should be increased or decreased as such. And it's a very seamless experience that one can go through on such a small case platform. And as far as taxation is concerned, it is similar to what equity taxation is. Short-term capital gains tax of 15% and long-term capital gains tax of 10%. Here, as compared to many other areas, the major challenge for most of the investors is to identify right kind of quality stocks, and which is where this SEBI registered professionals can help you out in identifying. So that's the differentiator as far as such kind of platform is concerned.
Great. Thanks.
Yeah, Krishnan, I'm sure. I mean, it was.
Yeah, it was quite interesting. You did cover a lot in a 1 hour plus time, but awesome insights, I must say. So, do we open participants?
Yes, please.
If you can share feedback on how did you like, and any question, maybe you can put it up in the chat, or you can unmute and ask. Ramchandran sir, you had some questions when you joined before. Maybe you can ask to Sumit now.
Am I audible now?
Yes, sir, very much.
Yes, sir.
Yeah. Actually, I want to know what is the scope for pharma and healthcare sector in the coming decade.
So, sir, I mean, of course, one of the areas where some of the API companies could be beneficiaries is the globalization, where we spoke about that specialty chemicals is beneficiary. So one has to look for companies within that particular sector, which is on the exports of APIs, and so that, I mean, one can come to specific companies, but at the same time, it is the API exports which is likely to kind of be beneficial. So something like DVs or further going down, many other smaller companies could be there. I would not like to name them.
Yeah, Laurus Engine, Newland.
Sure.
Yeah, I understand. Yeah. What about animal API? There are few companies.
Yeah, so there are specific opportunities which definitely has conversion as such, and they are doing well, no doubt about that.
Yeah,
I know which company you are talking about, but
not only Sequence Scientific. There are other one is there, no, but Omkar and the other one, that diverse.
I haven't met them as yet, so I would actually refrain from talking about them as such. So we generally meet the companies, and then only we try to.
Yeah. Okay.
Right, sir.
Thank you.
Thank you so much. Yeah, any further questions?
Any further questions?
Of course, the hospital sector also is good, no? Hospital.
Yeah, that has, I mean, consumerism is what can benefit them. So, sir, ultimately, what we also have to do is we have to ensure that we are not too kind of over diversified as such, and that is why we have to identify some of the themes which you can consistently work upon. Because what happens is, like for example, many themes can emerge. I have seen last 15, 20 years, there are many themes which emerge and ultimately they go up, they participate and they fall off. So one has
Correct.
to make sure that there is huge underpenetration, which helps the growth of that particular industry. There are managements which can grow this kind of businesses as such, and there are uh, tailwinds that help to grow them. So the I mean, if you keep on increasing the set of themes that we are playing, that compounding may not, over diversification hits you, and ultimately also the wealth generation doesn't really happen. So that is why we are kind of focusing on these 6 themes, which we believe can have a very long runway as such.
Mhm. One more question. Has
Yes.
already the mentioned sector has ran up significantly?
Which
Still,
one?
those sectors which you have identified for the next decade has ran up already.
So see, the whole idea is to stay ready with our analysis within that is another reason that we have chosen 6 themes, where out of 6 themes, yes, there can be a situation where one or two themes could have ran up, and which is where we focus on themes like, for example, IT sector got corrected. Now it is offering an opportunity per se, right? And similarly, maybe a month back, despite the correction, if you look at financialization and consumer theme, actually ran up quite well, right? So that is the reason so just to see, if you look at this, last 1 month, consumerism and financialization have outperformed any other themes as such. So
Not all.
here, this is the combination, but if you still feel any themes are good for you, or maybe not ran up, like for example, Technification is yet to participate. And this is where the combination comes into picture. So, but then the whole idea is to ensure that we don't lose out on that particular theme. So just to give my past example, during 2008, infrastructure, or 2003 to 2008, infra was like a booming theme. But one has to further ensure is what happens in the next cycle, whether they will become dud stocks. I mean, I remember IVRCL of the world, Nagarjuna's of the world. Nagarjuna is still there, but there are 5, 10, 15, 20 companies which have gone bust.
Yeah,
So
yeah.
one should
Foods.
ensure that you are not getting into a theme where companies could get bust. So, like for example, consumerism is having a very good tailwind of participating with economic growth. Financialization, same way. I mean, we are underpenetrated as far as the credit growth is concerned. Within that, private banks offer a further good opportunity as far as growth is concerned. Techification, as I explained, I mean, we are still kind of getting intimated with technology. It's not yet completely integrated. We are continuously seeing new technologies coming in. So IT services ho gaya, or any other platform companies ho gaya, all of them are good. But again, just because वो platform hai, we should participate in them. No, you have to go 1 step deeper, 2 step deeper, 3 step deeper, right? Same way, formalization is a big theme. I mean, we all, like, last 40 years, most of the entrepreneurs have just put their brains of how to avoid tax. And now that unorganized is getting into organized, and ultimately the thought process has to go to how the business should be run the best. So those sectors are going to offer a huge opportunity. Same way, your exports, globalization, or clean energy, I mean, we spoke about them. All these things, themes are offering a long runway. And that is why we are in it. And as you rightly asked, sir, maybe some of the themes would have run up, but what we have to also ensure that these themes don't, I mean, there is not a situation of loss of capital. Like Warren Buffett always says, have 2 principles: ensure that you don't lose the capital, and second is don't forget the rule number 1, right? And that is why just 6 themes. I mean, there are many other themes. I mean, I'm not saying that these are the only themes as such. There are many other themes. And yes, there will be kind of opportunities arising in them. But in our view, these six themes are going to have a very long runway. We are going to see companies that are going to participate in it. Just to give an example, sir, IT in 2000, Infosys again would have gone up. So I mean, it create since then it has created so much wealth, right? Post the dot-com crisis, everything crashed, right? So if it is only because the managements are focused, it is only because it is able to generate high ROCs that all such businesses have come back, right? So we need to ensure that we are in a sector where a long runway of growth is concerned. And as I also shared with you that there is still a huge under penetration as far as IT services is concerned. I hope this clears your question.
Yeah. In IT now, ER&DC is most sought after.
Right. So yes, I mean, of course, I'm sure you are talking about KPITs, LTTs.
Yeah, KPIT, Tata Elxsi.
Correct. Tata Elxsi again is a beneficiary of electric vehicle as such. Right.
Thanks, Sumit.
What about the scope for product design and product like that insert design and all in IT?
So yes, I mean, there is an opportunity, but at the same time, what is happening is most product companies are getting themselves into SaaS, software as a service. So most products companies are getting converted into that, and everything is becoming kind of cloud enabled, and that is why there is an opportunity wherever these companies getting converted into a SaaS. So it has a bright future.
Thanks, Sumit. Thanks, Ramchandran sir, for your questions. Even you seem to have very deep understandings of sectors and stocks. From the range of depth of questions, I could guess that.
Was quite helpful. Thanks a lot for all your time.
Superb session, Samir, Sumit. Do keep it up.
Thank you.
Looking forward for more such knowledge insights from you.
Surely, and we will upload this video on YouTube as well. And please subscribe to all our channels or any of our channels where you are comfortable, and you would keep on getting updates from our side. So let's stay in touch through social media. Thanks a lot for your participation, giving your time. Wish you all the best in your wealth creation journey, whether with us, without us. All the best.
Thanks all.
Thank you.
For taking
Krishnan.
time on a weekend, especially.